Hello, everybody. Damien Simonfi here from Capital Bridging Finance. So this is my first opportunity to work with Coffee and Finance. So just a quick shout out to Dan and Coffee and Finance for organising this chat. And just 10 seconds on Capital Bridging Finance. It's self-explanatory. Our head office is in Melbourne. We've got a second office in Queensland. And we provide commercial and NCCP bridging loans really quickly with no fuss. And what better way for me to kick off with Coffee and Finance with first time to chew the fat with the current Senior Cabinet Minister, the Honourable Stuart Robert MP, who's the Minister for Workforce, Skills, Small Business, Family. I understand, Stu, also you're Minister for Education and Youth.
There's a bit on, but Damien, great to join you and great to join the financial broking industry. Thanks for what you do. For those unaware, Damien's company, Capital Bridging Finance, has provided advice to me and to Treasury over many years in terms of the impacts of government policy in that bridging finance space. So always pleased to join you.
Lovely. Stu, just a quick introduction, I suppose, for our audience. Look, the professional financial service advisors, brokers, small family businesses, some of our audience may not be aware of how you've assisted the industry in the past when you were the Assistant Treasurer. Maybe as a teaser before we start peeling the onion back, Labor at the last election, they wanted to abolish broker trail books. I mean, what's your position and what did you do to protect those critical assets of the audience?
Well, we stepped in very clearly after the Hayne Royal Commission to ensure there was balance for Australians, but also to ensure the industry was protected. And I spoke at many industry conferences, made the point very clearly that appropriate trail is important. It's important for brokers and what they do. We've reduced the amount of payment for licensing and fees for brokers in the same space. And of course, we'll talk a bit later about what we're doing in housing to ensure there is access to housing for Australians so that brokers can continue to engage. When I speak to the major banks, one of the big four told me that 80% of their entire residential mortgage-backed security book has come through mortgage brokers, for example. And that's just how important the mortgage broking as one sector of this industry is. So the Liberal National Government will always have the backs of the broking industry. They're an important part of our community, an important part of the small to medium and small and family business sector.
Yeah, okay. Well said. I have to say, look, you know, we live in some really unusual times at the moment, and there's a lot of uncertainty in many facets of life, you know, over the past few years. And for many businesses, man, look, it's just really tough, Stu. And what can you say to the audience that might resonate with their circumstances as small business operators?
The last 2 years, we've seen a crisis in the pandemic over 30 times worse than the GFC. And I was a member of Parliament during the GFC, and that was pretty hard. And goodness, I remember the times of the recession we had to have under Labor in the 90s, where interest rates were 17.5% as a cash rate in January 1990. So this pandemic has been extraordinary for the last 2 years, and the government has well and truly had the back of Australian businesses. JobKeeper was the single biggest fiscal program that any government in Australia has ever launched. I was a member of the Expenditure Review Committee and the Specialist National Security Committee that oversaw our response to COVID. We moved very quickly because we knew we were looking at facing unemployment rising to 15% unless we acted decisively, and JobKeeper was decisive. The provision of tens and tens of thousands of dollars in cash flow support for small business was decisive, allowing the instant asset write-off and allowing the carryback in terms of bad statements was decisive. And it was there to bring confidence into markets. It was there to give much needed cash flow, as we've just done in terms of reducing the GST inflator rate to 2%. And that'll save small businesses up to $1.8 billion in cash flow when they put their bad statements in. All of this is designed to help the business community to grow. And we've seen it. We've seen the economy now projected to grow at 4.25%, grew at almost 5%, unemployment at 4% and going lower. So we've seen that stabilisation in many ways because of the hard work of the business community and the Morrison government having their back. We know it's tough. We understand that. That's why we took the measures we did.
Well put, Stu. Incidentally, I mean, I think, in March, you attended the boardroom dinner. We had some 12 heavyweight industry leaders around the room, building construction, financial services, taxation, manufacturing, logistics. And the one consistent issue right on the back of everything you just said was employment. You know, we can't find workers, the warm well-dressed mob sat at the table. We can't find workers. Give us a warm body. How do we resolve that issue?
And they're right. Unemployment is coming down at 4%. It's actually 3.95%. But that number was a bit complex for Mr. Albanese to remember, so we upgraded it to 4%. We sort of hope he can remember that number. And it will come down. Treasury and the RBA believe unemployment will come down to 3.5%. The unemployment numbers are out this Thursday, and all indications are they'll come down lower again. So we are heading towards full employment. Reserve Bank Governor indicated full employment would have a 3 in front of it. Well, we are on the verge of that. Now, we opened our international borders on the 20th of November. 870,000 people have crossed that border, including 160,000 more students, to take our student numbers, international students, to well over 370,000. I've removed the 20-hour work limit from them so they can work unlimited hours.
Is that trajectory going to continue?
The trajectory,
150,000 a month.
We've seen 168,000 or so arrive since the 20th of November. So the trajectory is about 6,000 a week, new students coming in. 85,000 skilled visas have arrived in terms of short-term visas. So we're probably about 300,000 visas with work rights less than where we were pre-COVID. But we've also got the highest participation rate in our nation's history at 66.4%, one of the lowest levels of employment for women in 50 years at 3.7%. So quite extraordinary. We're picking up more of the population into work, driven in many ways by the government's skilled agenda. We're seeing more overseas workers coming through. Now, the government is unashamed in wanting opportunities for all young Australians to get them into work, and we're seeing that with youth unemployment down to 8.3%. So we'll continue to get that balance between skilling Australians and giving them opportunities and ensuring there's a flow of overseas short-term visa workers coming through. Pre-COVID, there's about 1.8 million visa holders with work rights. We're now at about 300,000 less than that, 1.5 million, and we'll continue to ensure that flow comes through, but nicely balanced to ensure that every Australian has got an opportunity to get skilled and get a job.
Too many jobs, what a quality problem.
It's a great problem.
Could be the other end of the spectrum.
The Internet Vacancy Index is at an all-time high, which is an index that we use for the National Skills Commission to understand the demand for workers. It is at an all-time high because the economy is growing 4.25% this year at an enormous speed. One of the fastest growing economies now in the OECD. And the great thing, Damien, if you look at people in work, we are one of only a handful, if indeed the only country on earth with more of its citizens in a job now than pre-COVID. An extraordinary achievement that together we've been able to do.
I'm guessing I'm going to have some employees asking for pay rises.
Whenever you get a tight labour market, there's always pressure on wages, no question. Now, the wage price index at 2.3% for the December quarter belies the fact that the national accounts on average earnings tells us that that's about 3.4%, because that factors in issues of bonuses and the like. And there will be pressure on wages. There's no question about that. And we'll see the wage price index rise. Reserve Bank has indicated that's the case. Like all things, wage rises should be in the back of productivity to ensure that we get the most out of our country. And if it's not on the back of productivity, it feeds into inflation. And that's again why the federal government has got such a strong skills agenda to ensure we're getting productivity driving through those wage increases.
I'm satisfied with that. I'm going to move on to question 11. Inflation is as violent as a mugger, as frightening as an armed robber, as deadly as a hitman. These are the words of Ronald Reagan on inflation. It's back, and I know that it scares people, Stuart, and its reaches well beyond our borders. What levers do you have to keep inflation in check as a government?
Inflation is on the rise. The last 6 years, we saw the consumer price index not getting the Reserve Bank's band of 2 to 3%. Then we saw it start to increase in the December quarter. And then, of course, the March inflation numbers come out, which gives us an annualized rate of 5.1%. The Reserve Bank expects it to peak at 5.9 and then start to come down. So it is a challenge. It's important. Inflation around the world now is almost at a 30-year high, and we're seeing numbers as high as 10% in other countries of the OECD. So comparatively, we're doing very well. Inflation is important. It's driven by the supply constraints in terms of shipping and delivery of cargo. Container costs are still 400% higher. The shipping constraints out of the major ports in China is enormous, and a quarter of our goods come from China, so that's having an impact. And the biggest impact, of course, is a war in Europe. Who would have thought, Damien, we'd be talking about another war in Europe, where Mr. Putin has unilaterally invaded Ukraine, a country of 44 million people. And that, of course, has led to a price in fuel, and everything runs on fuel. So what we've done, of course, is to immediately cut the fuel index by half, by 22 cents, and that'll have a 25 basis point dampener on inflation as a whole, because fuel flows into everything. There's $8.5 billion cost of living adjustment within the budget to provide cost of living pressure for more vulnerable Australians or Australians on fixed incomes. Now, inflation will dampen. The RBA's view is the same. Once we start to see that container issue and supply chain issues start to normalise, then we all pray for a swift end to the war in Europe and for fuel prices to start to normalise as well. But the government will watch this carefully and closely to ensure that Australians aren't being priced out because of where inflation sits.
Back to the local, thanks, Stu. Question 4, back to interest rates. Look, you and I, we spoke last September at length, and you rightly predicted that interest rates would rise. You were right then, and where are interest rates in, say, December and 18 months from now? And don't worry, I won't hold you to this, but I probably will. I'm kidding.
They dropped to emergency rates, 0.1% of the cash rate. Some countries in the OECD went negative. Can you believe that? Where you'd put your money on deposit and you'd get less back again, but at least you had security on funds. The 25 basis point to 35 basis points where we sit now, the Reserve Bank has indicated is the start of the normalisation cycle. Rates could never sit at 0.1% in terms of the cash rate. We inherited a number a whole lot higher than that. But unless we get inflation under control with good government, that's why this election is a choice, we could be faced with some really quite high numbers if Labor gets back in charge. We saw that. I remember it well as a young 20-year-old in 1990 when rates were at 17.5% at a cash rate level. It was an extraordinary time. Now, no one foresees that. But the key is they'll start to normalise. The Reserve Bank has made that very clear. They'll start to see a number of rate rises going forward as they seek to use that lever to fight inflation. But it's really important the federal government, through fiscal policy, works very tightly with the Reserve Bank on their monetary policy. Unfortunately, the Labor Party has indicated that they'll have a higher tax and a higher spend regime. Anytime you put a lot more money into the economy on top of the imported inflation, you'll drive that inflation genie. And we saw that with the discussion regarding the minimum wage, where we've said the Independent Fair Work Commission should look at this and the economy as a whole. The Labor Party has come out to say, no, everyone must get a 5.1% pay rise. Well, if you do that to the minimum wage, of which only 1.8% of the population are on it, that minimum wage then flows into 2.5 million award recipients, and you'll get an inflationary genie as the Labor Party chases it, and that'll see the cash rate rapidly rise. We need a very steady hand on the economic tiller right now, and that's why, Damien, the election is a choice.
Yeah, it's a fair comment. Interest rates is just, before we move on, I don't think anyone actually expected interest rates to stay at historical lows. It's completely unnatural.
Well, they can't. A cash rate of 0.1% is quite extraordinary. So they were never going to go there. They were always going to normalise. However, the policy settings of government and government's expenditure will determine in many ways where inflation goes, because any expenditure government does is on top of the imported inflation through fuel prices and supply chain restrictions. And this is where a more disciplined, lower spending government like the Morrison government is just far more advantageous now than a high spending Labor government.
Look, straight into segue into cost of living. I mean, look, Stuart, it's noticeable. I don't even know where to start. I mean, it feels like just everything is expensive everywhere, and this is the sentiment throughout, in every person I've ever spoken to. It's not a question. It's just, what's your thoughts on cost of living?
It's going up in many ways, driven by those supply constraints, but also because everything drives on trucks in Australia. They really do. So the price of fuel feeds into everything, which is why the halving of the index was the first thing we did to bring pressure off. And it'll bring a full 25 basis point pressure off inflation. And you'll see that flow into a lower cost of living. Now, if you look at the cost of living pressures and look at the the March quarter for these, some things, clothing and footwear, has gone down and it's consistently low. The price of energy is 8% lower than it was 2 years ago. Compare that to the US, where gas is 23% higher. So there are areas where government policy has actually driven the cost of living to decrease. The big inputs, of course, fuel is huge, having risen by something like 37% over the last 12 months, and the price of inputs into housing. And that's driven by the container shortage and the supply chain constraints. It's why the war in Europe and that supply issue in shipping are the two big driving determinants. They're outside of our control to fix. We can start to ensure that productivity in our wharves is higher. That'll help when products start to move in. But they're the two big determinants. And again, it's why that cost of living package was in the budget.
And it's not a question, but it's just, it feels really expensive when you go fill up at the service station. It feels expensive when you're buying groceries. This is just where we're at the moment, and I thought it was a reasonable point to raise. Great answer.
No, it is an important point, and it just amplifies the point. We've got to have a government that seriously understands the economy. A government that doesn't have leaders half-cocked saying, well, of course, we'll give a 5.1% adjustment to the cost of living. What if it goes to 6 or 7%, Mr. Albanese? We just need a steady hand on the tiller. A sound, good, strong economy allows us to provide cost of living adjustments for Australians without things spiralling out of control.
Okay, all right, I'm happy. Look, a quick chest beat for a second on question 21. Look, I've been in the financial services space for 23 years, 18 years in funds management and bridging finance, and capital bridging finance has been successful in part. I've got a background in fixing problems with our sister company, DJ Partners. It's in the DNA of our company, and we work with brokers and we lend money seamlessly. It stems from just hard work, tenure, working with all the brokers, all our audience here. I've been advocating since 2008. GFC, that superannuation should be enshrined in legislation, utilised for purchasing a home, as Prime Minister Morrison said on the weekend, because it's like the single biggest asset you'll have. A roof over your head's essential. Sunday was the official launch of the Liberal Party campaign, and for our audience, what I'd like to ask on their behalf is first home buyer using superannuation to assist in purchasing their homes. We all get the positives, but does that place any pressure on the housing market as an unintended consequence?
Yeah, good question. The short answer is no, but I'll give a wider view. As the pandemic hit, we moved very quickly in 2020 to put the home builder in place. 160,000 Australians used that home builder, 25,000 to get into a home, and we've extended the start build date because of pressures. We then moved into the Home Super Saver, of course, to allow people to use the superannuation system to save for their home. We moved quickly to the Home Guarantee, whereby Australians could actually have a up to 5% deposit, in some cases 2%, and the federal government would provide assurance, security, if you like, for the last 15%, so lenders' mortgage insurance wouldn't be required. Those policies have seen over 300,000 Australians get into a home in the last few years. And all the brokers on the call have benefited from those interventions by the federal government to keep the housing or house builds and people into the housing market strong. What we announced on Sunday, or Saturday, Sunday, goodness, what day is it today? Monday? What was it yesterday? Tuesday. What we announced on Sunday was to allow first home buyers to use their super, to use 40% of their superannuation, no higher than $50,000 for getting into their first home for first home buyers. There's 100,000 first home buyers per annum, which is about 1% of the total housing stock market. So if the total housing is worth 10 trillion, give or take, we're talking 1%. If all 100,000 all went and bought an average house at $600,000. Now that won't happen. Not all 100,000 will use their super. Some of them might use their super saver. Some of them might use the first home guarantee. But there's a range of policy options there. But at 1%, you're not going to see an inflationary drive out of that policy. But at the same time, on the other end, we've always had a policy to say that if you were 65 and selling your home, you could put up to $300,000, or as a couple, $600,000 into your combined super. We have now brought that back to 55. So if you turn 55 and sell your home, you can put $300,000 into your super fund. If a couple, they can put $300,000 each. And that's designed to free up housing stock. They're going to downsize and free up a home for a family. So you've got freeing up on one end, you've got capacity to use your money. It's your super. It's not the government's money at this end. And that'll see an inflationary offset. Plus, at less than 1%, you're not going to see a large inflationary adjustment. And compare that to Labor Party, where they're saying the government will own 40% of your house. Well, how does that work? WA has had that policy for almost 10 years and less than 2,000 people have taken it up. Under Labor's policy, you can $120,000 as gross income, but if you earn $1 more and the government's taken 40% of your house, you're going to sell your house and pay the government back. Well, what do you do if you buy a pool or you do some renos? Does that mean you got to ask the government every time you go to Bunnings? Does that mean Albanese is going to be a flatmate? I mean, it's a ridiculous policy by the Labor Party. Your house, you own it. Let's keep it simple. Our super scheme is simple. We don't care what the price of the house is. We don't care what it is. You can use that money out of your super fund. It's your money. If there's a couple, both of them can use it. They can add some extra of their savings in. Mum and dad can help them if they want. It doesn't matter. And then when you sell it, that money goes back into superannuation. So the system holds.
Fair enough. Look, another scenario. What about the many Australians who've maybe owned a home in the past? Maybe they got divorced or they fell on hard times. They've lost their homes and they're out of the market. Maybe they're in their mid-40s. They want to buy a house again and they're not a first home buyer. Why can't they access their superannuation for the first time to re-enter the housing market for the second time?
One scheme doesn't solve all problems. The home guarantee is there for other Australians who are looking for opportunities to get into a new home, as is the Home Super Saver Scheme. The beauty of first home buyers in super is that we know a major predictor of poverty in later life is you don't own your own home. Those who are on a pension are in a far better position if they own their own home. That's why it's so important for Australians earlier in life to get into a home, because that home will appreciate in value, just like their super fund will appreciate in value. But together, this whole suite of policies, from the home guarantee, the super saver, the home super usage, the using sales funds from your home now at age 55, not 65, all of that is designed to help. Likewise, we've got over $3 billion now in the National Housing Finance Investment Corporation, NIFIC, which is on lending using the government's balance sheet to community housing providers. And we've seen over 35,000 community housing built by community housing providers to assist Australians who are vulnerable. Now, noting housing is a federal government responsibility, this is an enormous intervention. Sorry, housing is a state government responsibility. This is an enormous intervention by the federal government, but we believe so strongly in getting Australians into housing and getting ahead.
And just let me throw a curveball then. So heaps of countries in Europe, they've got multi-generational renters. It's a lifestyle. It's not because they can't afford it in all instances, it's because they choose not to own a home. The great Australian dream, have we maybe come to a point in time where housing is really expensive and maybe we don't need to own our own home?
No, I don't think so. Okay. We believe in choice. Not only is the election a choice, we think Australians should have choice. And we believe it's important for Australians as much as possible to get a home, only because the predictor of poverty in later lives tells us it's more difficult if you don't have a home. But we want Australians to have choice.
It's interesting. I mean, you've got couples in their 20s and they're signing up to 30-year for everybody all the time, especially when the housing is so expensive.
Most people, the biggest asset they'll ever own is a house. That's why the broking industry is so important, because it keeps banks honest and it gives competitive tension into borrowing, which I think is fabulous. That's why during the GFC, we put $200 billion into the TFF, the Temporary Finance Facility, which I know many of you used extensively, which was superb, designed to assist people in terms of that mortgage space. Our view is Australians, it's their money. They can choose how they want to spend it. I think buying a house is a wise investment, but I'm not going to tell Australians how to live their lives.
Perfect. Heard from the Minister. All right, so we've touched on small business, we've touched on inflation, we've touched on home ownership, we've touched on cost of living, we've touched on employment, and I am mindful of time for yourself and for the audience as well. So just a couple of really super fast, quick questions and answers. Future President of the United States, Joe Rogan or Oprah Winfrey?
Oh, I'm going with Dwayne Johnson, The Rock.
Good answer. Okay. Elon Musk challenged Vladimir Putin to a fisticuffs for the Ukraine about a month ago. I'm pretty sure you've met both of these guys. Who would win?
At least Musk wants to build, believes in freedom, and wants to create jobs. Mr. Putin is unilaterally invading and destroying a free democratic nation. I'm backing freedom.
Your state gets the 2032 Olympics with what I think is race walking. Keep it or get rid of it.
Race walking is superb. What have you got against walkers?
I've got nothing
Praise
against
God
walkers.
for the walkers.
I just thought I'd throw it in there. Saturday's election, hung parliament, outright winner.
I think the Australian people will be close,
Yep.
but the Australian people will back sound economic management and will back the Liberal National Party.
And you'll win. There.
That's
Okay.
my assessment.
Okay. Look, last question, and this is specific for the audience, really. I mean, what would a Liberal government do to further promote the finance broker industry moving forward on the back of everything you've already done, should you win on Saturday?
We'll continue to get out of your way. We want Australians to have choice. We want them to access their super, their money. We want them to leverage the government's balance sheet in terms of the home guarantee scheme so that they can get into a home. So we're going to give Australians choice in either using the government's balance sheet, using their own super, using the home super saver to find or raise their deposit in a lower tax environment. We're going to back in that degree of choice so the broking industry can then go forth, work with major primary lenders and find the best deal for Australians. So if we get out of your way, let Australians access more of their money and you do your job, I think the country is going to be in a fabulous position.
Okay. Look, there you have it for our audience. Minister Stuart Robert, thank you. I want to say thank you for your time today. Thank you for the audience today. I thoroughly enjoyed it. Again, thanks to Coffee and Finance. I actually feel like a whiskey, so maybe we'll start a new one called Whiskey and Finance.
It's too early, Damien.
It's a little bit too early, maybe on Saturday afternoon. Minister Robert, thank you very much. I appreciate your time.
Great pleasure.
Thanks.
Cheers.
See you.
Thanks, Steve.